Well, here in the U.S., market reaction was mixed. Initially, stocks rallied, in part on China's decision to cut rates, but then things turned negative. Karina Huber spent the day on the floor of the New York Stock Exchange where tensions were running high. Karina, this was a crazy, wild ride today. You were in the thick of the action. What was the mood of investors this afternoon?
Well, when the day started out, of course, they were very optimistic, as we saw by the open. The Dow was up by about 400 points, or roughly 2%. The other major indices up by roughly the same amount on a percentage basis. So they clearly liked what they were hearing out of China in terms of the interest rate cut. However, things turned sour later in the session. There was no real catalyst for the turnaround, but what I heard from traders that seems to be certain is that volatility is the name of the game and is here to stay in the next immediate while.
Things looked so good at the open, but by closing bell, the major indices had lost all of their day's gains, closing in the red. It was the biggest intraday reversal since the 2008 financial crisis. News that China would be lowering its interest rates and reserve ratio requirements initially helped trigger a rally, but then the euphoria fizzled. Traders like Peter Costa think volatility is here to stay for a while, and one of the main drivers of the U.S. markets will be China's economy.
I personally think that the Chinese issue is going to be a very big one. It's going to be a long-term issue, and we're going to be dealing with it. And the markets will reflect that, going forward. We're going to see a lot of movement from that.
So you don't think the worst is over yet?
No, I don't.
In an indication of how volatile the markets have been, on Monday and on Tuesday, the New York Stock Exchange invoked the rarely used Rule 48 that allows the markets to open quicker. In theory, a quicker opening is also a calmer one.
It has happened before, but I have never seen it happen 2 days in a row. We've had a lot of volatility, and it's not meant to dampen the volatility, but it's just meant to give investors an opportunity to see what's going on.
The market turmoil has raised questions about the wisdom of raising U.S. interest rates later this year, something the Federal Reserve has indicated it would like to do. In an opinion piece, former U.S. Treasury Secretary Larry Summers said that raising rates in the near future would be, quote, a serious error that would threaten all three of the Fed's major objectives: price stability, full employment, and financial stability. Dan Alpert isn't convinced the U.S. central bank will make any drastic moves given current market conditions.
Even if the Fed raises rates domestically, it's going to be by so little and probably only once this year. And I'm not sure, given the circumstances now, that the Fed is going to do it at all.
One thing is certain: the decisions of central banks in China and the U.S. will have a dramatic impact on global stock markets in the near future.
Now, all of this volatility, of course, may rattle investors, but it's great for traders who like to get in and out of trades quickly because it's an opportunity for them to make a lot of money. Michelle?
Yeah, a lot of money can be made and can be lost. And speaking of a lot of money made, Karina, not all shares were losers in Tuesday's session. Interestingly enough, shares of Chinese companies traded in the U.S., or ADRs, American Depository Receipts as they're known, and Chinese companies that are listed here in the U.S., well, they actually performed quite well today. Alibaba, for example, up 4.2%. Karina, tell us more about that.
Well, you're absolutely right, Michelle. And that was sort of an interesting thing to note. There are 107 Chinese companies listed here in the U.S., and the majority of them did trade higher on the day. Give you an example. Weibo closed 10% higher, JD.com, and Renren did well as well, trading almost 5% higher. Baidu is down almost 3%, but in general, they did outperform the broader market. So what does that tell us? Well, it could mean that investors feel confident that China will be able to rein in its current economic problems, but it could also just mean that, they saw an opportunity to buy right now because prices had been pushed down in earlier sessions. It's hard to know exactly why an investor buys something on the day. We'll have to really watch these shares over the next few sessions to see what's really going on, to get a sense that this is really an indication of investor confidence in China. Michelle?
Definitely something to watch. Quite a discrepancy that you got Chinese companies rallying on concerns of the Chinese economy. Anyway, thank you so much, Karina Huber, live for us in New York.